Friends, thank you for being here today. What if I told you that the very government that has denied the strategic importance of precious metals for 50 years has just quietly signed the largest check in history to secure them before they disappear? And ask yourself this: if the people who print the money are suddenly trading billions of those printed dollars for hard, physical metal, what does that tell you about the future value of the paper in your wallet? For decades, we have gathered in coffee shops, in living rooms, and later in online forums to discuss a reality that the mainstream media refused to acknowledge. We whispered about the fragility of the paper market. We warned our neighbors that the day would come when the just-in-time global economy would fracture, and the United States would wake up to find its cupboards bare. We were called alarmists. We were told that the free market would always provide, that the global supply chain was unbreakable, and that silver was nothing more than a pet rock, a barbarous relic of the past with no place in the modern digital economy. But today, looking at the events that unfolded in December 2025 and January 2026, the whispering has stopped. The theories have ended. The reality is now etched in steel and concrete in Clarksville, Tennessee. The panic is no longer just a rumor. It has officially arrived at the highest levels of the United States government. The ink is dry on a deal that changes everything we thought we knew about their relationship between Washington, Wall Street, and the physical metals market. This brings us to the wake-up call that has triggered panic at the highest levels. For those of us who have lived through the inflation of the 1970s, the tech boom of the 90s, and the financial crash of 2008, we have developed a keen sense for when the narrative shifts. Usually these shifts are subtle. A changed word in a Federal Reserve statement. A quiet resignation of a Treasury official. But what happened on December 15th, 2025 was not subtle. It was a seismic shift in American industrial policy that screamed of desperation. While the retail public was distracted by the holiday shopping season, and while the cable news pundits were arguing about Bitcoin and the latest tech stock bubble, the United States Department of Defense, DoD, quietly executed one of the most significant strategic maneuvers in the history of the metals market. We are now receiving confirmation of a massive, game-changing deal. The U.S. government, through the Department of Defense and the Department of Commerce, has partnered with Korea Zinc to build a massive $7.4 billion critical minerals processing facility in Clarksville, Tennessee. To understand the magnitude of this, we must look back at the last half-century. Since the 1970s, the United States has operated under a specific economic philosophy: outsource the dirty work. We closed our smelters. We shuttered our refineries. We decided that we would be the brain of the global economy, handling the finance, the design, and the software, while we let developing nations, primarily China, handle the brawn, the smelting, the refining, and the pollution. We exported our industrial capacity and imported finished goods. For 50 years, this arrangement seemed to work. Prices at the store stayed low, and the stock market went high. But in doing so, we handed the keys to our national survival to our greatest geopolitical rival. We allowed China to gain a chokehold on the processing of the very metals that make modern life and modern warfare possible. The announcement of the Clarksville facility marks the official end of that era. This is not a small research grant. This is not a subsidy for a university study. This is the first major non-ferrous metal smelter to be built on American soil in 5 decades. Why now? Why is Uncle Sam suddenly dropping over $7 billion to bring metal processing home? The answer is simple, though terrifying. They know what we know. They know the global supply chain is snapping. They have looked at the ledger, and they realize that in a world of physical shortages, you cannot print silver. You cannot print zinc. You cannot print the indium needed for touchscreens. The powers that command the armies and manage the currency have realized they were naked, and they are now scrambling to cover themselves before the winter sets in. To truly understand the gravity of this situation, we need to dissect the anatomy of the deal and the unprecedented government control it establishes. The dollar amount, $7.4 billion, is staggering, but it is not the most shocking part of this deal. In Washington, billions are spent every day. To understand the true level of panic, you have to look at the structure of the ownership. In a typical government contract, the government might give a private company a loan or a tax break to build a factory. The company builds it, sells the product, and pays the government back. That is how the free market interacts with the state. But the Clarksville deal is different. The Department of Defense is taking a 40% equity stake in this project. Let that sink in for a moment. The United States military will own nearly half of the production capacity of this facility. They are not just a customer standing in line with everyone else. They are the owner. This is effectively the nationalization of a portion of the silver supply chain. It means that the metals produced at this facility, the silver, the zinc, the indium, are not going to be sold on the open market to dampen the price on the COMEX. They are not going to be sold to jewelry makers or bullion dealers. These metals are being removed from the commercial market before they are even refined. They are going straight from the smelter into the strategic stockpiles of the U.S. military. This facility is designed to process 1.1 million tons of raw material annually. It will produce 13 specific non-ferrous metals. And guess what? 11 of those 13 metals are listed as critical minerals by the U.S. Geological Survey. Silver is at the very top of that list. For years, many in the financial press have dismissed silver. They called it a poor man's gold. They said its industrial uses were exaggerated. But the Pentagon does not deal in exaggerations. It deals in ballistics and logistics. They have realized a hard truth. Without silver, the United States military effectively ceases to function as a modern fighting force. Silver is the most conductive metal on Earth. It is irreplaceable in electronics. Without silver, you cannot build the Tomahawk cruise missiles that protect our fleets. Without silver, you cannot build the complex avionics systems of the F-35 fighter jets. Without silver, you cannot build the next-generation satellites that provide our GPS and communications. The government looked at their stockpiles in December. Then, they looked at the export bans looming from China. They did the math, and they panicked. They realized that if they didn't act now, if they didn't physically seize the means of production, they would be unable to manufacture the weapons necessary for national defense by 2027. This validates everything the silver community has been saying for years. We said silver was a strategic metal. They called it a pet rock. We said industrial demand would eventually overwhelm supply. They said we were crazy. We said the government would eventually have to intervene to secure metal. They said the free market would handle it. Does a $7.4 billion government-owned smelter look like the free market to you? No. It looks like a frantic attempt to secure resources during a crisis. It proves that at the highest levels of power, they view silver not as a currency to be manipulated, but as a material that must be secured at any cost. I want to pause here for a moment because this is the crux of the matter. When you see the government bypassing the free market to seize assets like this, does it make you feel more secure? Or does it signal to you that the system is in deeper trouble than they are admitting? I want to hear your take on this. Please leave a comment below and let me know if you think this is prudent planning or a sign of desperation. But why is this happening right now? The answer lies in the rise of resource nationalism and the escalating threat from China. To understand why this is happening right now, in January 2026, we have to look at the geopolitical map. The Clarksville facility is the cornerstone of a new strategy that military planners call Fortress North America. For the last 30 years, the West has been playing a dangerous game. We were happy to dig rocks out of the ground in Nevada, Mexico, or Peru, put them on a boat, ship them across the Pacific to China, let China refine them, and then buy back the finished metal. It was efficient. It was cheap. But it relied on one assumption, that the world would remain peaceful and that global trade would remain free. That assumption is dead. The world is fracturing. The Pentagon looked at the map and realized a terrifying truth. North America processes less than 10% of the world's critical minerals. China processes between 80% and 90%. If a war were to start tomorrow, or if a trade embargo were to escalate, it wouldn't matter how much silver ore we have in the ground in Mexico or Nevada. If we can't turn that rock into high-purity, military-grade bullion, we have nothing. We have dirt. And you cannot put dirt into a hypersonic missile guidance system. The Clarksville smelter is the answer to that strategic nightmare. But the location is key. Why Tennessee? Why not a coastal city? Tennessee offers a central logistics hub, accessible by the Mississippi River network. The strategy here is interdiction. Right now, the vast majority of silver and zinc concentrates produced in Latin America, from the rich mines of Peru, Chile, Mexico, and Bolivia, are loaded onto bulk carriers and shipped west to Chinese smelters. China buys the raw earth, refines it, keeps the strategic byproducts, like indium and gallium, for itself, and sells the leftovers back to us. The Tennessee smelter is designed to intercept that flow. By building a world-class facility in the American South, closer to the source, the U.S. is trying to create a gravitational pull stronger than China's. They want the miners in Lima and La Paz to send their ships north to New Orleans instead of west to Shanghai. They are trying to cut the supply line that feeds the Chinese industrial beast. This is also a direct response to the situation in Venezuela. We know that Venezuela sits on massive underdeveloped mineral wealth, not just oil, but gold and silver. China has been actively trying to lock down these resources through loans for oil and infrastructure for minerals deals. The U.S. cannot allow a Chinese resource colony to exist in its own backyard. The Clarksville smelter gives the U.S. a commercial weapon to fight back, an ability to say to Latin American nations, we will process your metal here. We will integrate you into the Fortress North America supply chain. It is, in essence, a modern industrial version of the Monroe Doctrine. But instead of gunboats, we are using blast furnaces. Furthermore, we must look at what China is doing. On January 1st, China implemented new export controls, but it goes deeper than that. China is actively de-dollarizing its supply chain. They are paying premiums in yuan to keep their domestic metal at home. They are telling miners in Inner Mongolia, don't export. We will pay you better than the Americans. This creates a drain on the international market. China is vacuuming up physical inventory, and the US realized it could not compete in a bidding war on the open market without destroying the value of the dollar. If the US government started bidding up the price of silver on the COMEX, it would admit that the dollar has lost purchasing power. So instead of fighting a price war, they decided to build a fortress. They decided to trap the metal before it can leave the hemisphere. All of these factors lead us to a stark market reality: the death of paper silver. This geopolitical maneuvering has created a fracture in the financial markets, a phenomenon we are calling the tale of two prices. And at the center of this financial storm is an unlikely player, J.P. Morgan. For the last 15 years, if you followed the silver market, you knew J.P. Morgan as the enemy. They were the architect of the paper suppression scheme. They held massive short positions, betting that the price of silver would go down. They were fined for spoofing the markets. They were the entity that kept the price of silver artificially low, frustrating investors for a decade. But we must never make the mistake of thinking these bankers are stupid. They are the most sophisticated commodity traders on the planet. And right now, J.P. Morgan is the bank structuring the financing for this $7.4 billion smelter. Why would the biggest short seller in history suddenly finance the biggest physical infrastructure project in 50 years? Because they know the game has changed. J.P. Morgan is not a gambler, they are the house. And the house never bets on a losing horse. They have realized that in a world of physical shortages, holding a paper short contract is a suicide mission. If the price of silver goes to $200 an ounce because of a shortage, their paper shorts would bankrupt them. So they are pivoting. They are moving from betting against the price of silver to owning the flow of silver. They are helping the government build this smelter so they can control the physical metal. They become the gatekeeper. They are effectively reshoring their business model. Instead of relying on London vaults, which are emptying, or Chinese refineries, which are closing to the west, they are building a fortress in Tennessee where they can process the metal themselves. This pivot by the smart money confirms that the era of paper silver is ending. And nothing proves this more than the arbitrage vacuum we are seeing right now. As of January 2026, we are witnessing a massive disconnect between the price of silver in New York and the price of silver in Shanghai. In New York, on the COMEX, the price is hovering around $75 per ounce. This is the paper price, determined by algorithms and futures contracts. But in Shanghai, the price has exploded to approximately $82 per ounce. This is the physical price, determined by factories that actually need the metal to operate. That is a spread of $7 an ounce. In the world of high finance, where traders kill for pennies, a $7 gap is an ocean. It represents a broken market. It screams that the West has lost control of the price. This spread creates a vacuum. If you are a global metals trader, do you sell your silver in New York for $75? Of course not. That would be financial malpractice. You put that silver on a plane or a boat and ship it to Shanghai to sell for $80. You pocket a risk-free 7 profit. This mechanism is draining the West of its physical inventory. It is a one-way river of wealth flowing from west to east. The West is selling its strategic assets at a discount, and the East is buying them at a premium because they know the true value. The existence of the Clarksville Project proves that the U.S. government knows the futures market is broken. If the COMEX worked, if a paper contract was truly as good as physical metal, the Pentagon wouldn't need to spend $7.4 billion to build a factory. They would just buy futures contracts. The fact that they are pouring concrete proves they know that when the crisis hits, you cannot melt down a piece of paper. You cannot put a digital promise into a missile. The paper market is a mirage. The physical market is the reality. And the government is spending billions to ensure it owns the reality. This forces us to confront the green paradox and the geological cliff that Washington can no longer ignore. We have spent considerable time discussing the military necessity of this project. The missiles, the fighter jets, the satellites. These are the things that keep our borders safe. But there is another war being fought, a quieter war, one that hits closer to home for every American who pays an electric bill or drives a car. It is the war between the political mandates for green energy and the geological reality of the planet we live on. Consider the irony, friends. For years, the same government that suppressed the price of silver has also been mandating a transition to renewable energy. They pass laws requiring electric vehicles. They subsidize solar farms covering thousands of acres. They tell us that the future is green. But here's the dirty secret they never mention in the campaign speeches. The green revolution is essentially a silver revolution. You cannot have a solar panel without silver. It is the most conductive metal known to man. It is the vein that carries the lifeblood of electricity through the system. As the efficiency of solar panels increases, the demand for high-purity silver paste does not go down. It goes up. The electric vehicles they want you to drive, they use up to twice as much silver as the gas-powered car sitting in your driveway right now. The planners in Washington looked at their own net zero charts, and then they looked at the mining charts, and they realized the math didn't work. It was a mathematical impossibility. The world has been in a structural silver deficit for 5 years running. We have been consuming more than we mine, filling the gap with above-ground stockpiles, but those stockpiles are gone. The cupboards are bare. We are facing a geological cliff. We aren't finding new massive silver deposits. Ore grades, the amount of silver found in a ton of rock, are falling globally. It takes more energy, more money, and more time to get less metal out of the ground, and yet demand is going vertical. This creates a terrifying pincer movement. On one side, you have the military demanding silver for national defense. On the other side, you have the green energy industrial complex demanding silver to meet government mandates. And stuck in the middle is the available supply, which is shrinking. The Clarksville smelter is the government's admission that the free market cannot solve this paradox. They realized that if they left it to the open market, the price of silver would have to skyrocket to hundreds of dollars an ounce to balance the books, which would destroy their green energy goals. Solar panels would become too expensive to build. The transition would fail. So they are bypassing the market entirely. They are securing the metal at the source to ensure that their needs are met first. They are making sure that when the shortage hits, and make no mistake, it is hitting right now, the military and the state-sponsored green projects get the metal, while the rest of the market fights for scraps. This is the ultimate betrayal of the free market investor. They tell you silver is abundant while they build a fortress to hoard it. They tell you to trust the paper currency while they exchange it for the only asset that makes their technology work. They are hedging against their own policy failures. The Clarksville Protocol is not just a military strategy. It is an industrial lifeboat for a government that realized it promised a future it didn't have the resources to build. Now, we must consider the historical gravity of this moment, the reverse Nixon shock. To truly grasp why this is the end of the trust me economy, we have to look back to 1971. That was the year Richard Nixon closed the gold window, effectively telling the world that the US dollar was no longer backed by anything other than the full faith and credit of the United States government. For 55 years, that was the deal. We printed paper, the world accepted it, and in exchange, they sent us their cars, their oil, and their electronics. We exported inflation, and we imported standard of living. But the Clarksville Protocol is the bookend to that era. It is the reverse Nixon shock. In 1971, the government said, we don't need metal to back our power. In 2026, with this $7.4 billion check, they are quietly admitting we cannot maintain our power without metal. This is a silent admission of defeat for the fiat experiment. Think about the mechanics of what is happening here. The government is printing money, which costs them nothing, to buy silver and zinc, which costs real labor and energy to produce. They are exchanging a depreciating asset, the dollar, for an appreciating asset, strategic metals, at a frantic pace. This is Gresham's law in action. Bad money drives out good. The government is spending the bad money to hoard the good money before the rest of the world catches on. This is the exact same behavior we see from central banks around the world who have been buying gold at record rates for the last 3 years. They are de-risking from the dollar system. But while central banks buy gold for financial reserves, the Pentagon is buying silver for industrial survival. It is a form of industrial mercantilism. They are preparing for a world where your credit rating doesn't matter as much as your physical inventory. And this leaves the average American saver in a precarious position. If the government is dumping dollars to buy hard assets, why are you holding dollars? If the entity that issues the currency is frantically trading it for physical goods, that is the ultimate signal that the currency is losing its utility. They are front-running their own citizens. They are securing their lifeboats while telling you that the ship is unsinkable. This reverse shock also signals a breakdown in trust between the industrial base and the financial base. For decades, companies like Apple, Tesla, and Samsung trusted that they could always buy the materials they needed on the spot market. But the Clarksville deal shatters that trust. It introduces a new player to the market, a player with a printing press and an army. When the Department of Defense locks up 40% of a major smelter's output, that is 40% that cannot go to the private sector. This creates a crowding out effect. As industrial giants realize that the military is hoarding supply, they too will panic buy. We will see a rush to secure physical inventory that will make the toilet paper shortages of 2020 look like a picnic. But this time, it won't be consumer goods. It will be the building blocks of the modern world. The just-in-time delivery system is dead. The just-in-case hoarding system has begun. And in a hoarding economy, the price of everything physical goes vertical against the price of everything paper. Finally, we must ask, what does all of this mean for you, the individual investor? So, friends, where does this leave us? Where does this leave the individual who has worked hard, saved, and is looking to protect their legacy in these turbulent times? We are watching a battle of titans. On one side, you have the Chinese industrial complex, vacuuming up every ounce of metal to dominate the 21st century. On the other side, you have the US government and JP Morgan frantically building fortresses to hoard what remains in the Western Hemisphere. When the most powerful military on Earth and the most powerful bank on Earth join forces to hoard an asset, that is not a signal to sell. That is a signal to buy. It is the ultimate insider tip. The government is acting like a prepper. They are filling their pantry. They are boarding up the windows. They know a storm is coming. If the Pentagon is panic buying, why aren't you? The window to acquire physical silver is closing. As this smelter comes online and as the government locks up supply through exclusive offtake agreements, the amount of silver available for the retail public, for you and me, will shrink. Do not listen to the Federal Reserve Chairman when he tells you inflation is under control. Do not listen to the bank analysts who tell you silver is a dead asset. Watch their hands, not their lips. Their hands are writing billion-dollar checks to secure silver. This $7.4 billion investment puts a permanent, unbreakable floor under the silver market. The government has become a price-insensitive buyer. They will print whatever fiat currency is necessary to secure the metal they need for national defense. You are holding the winning hand. If you own physical silver, you are holding a piece of national security. You are holding the very material that superpowers are fighting to control. The Shanghai breakout to $82 was the warning shot. The Clarksville smelter is the declaration of war. We are entering a period of history where the return on capital does not matter as much as the return of capital. The paper system is burning. The debt is unpayable. The only safe harbor is the physical asset that has no counterparty risk, the asset that conducts electricity, the asset that reflects light, the asset that kills bacteria, silver. Do not let the volatility shake you out. When they smash the paper price next week, remember the Pentagon. Remember that while the price on your screen went down, the government just spent billions to make sure they have enough. If they aren't selling, neither should you. Be right, be patient, and sit tight. You are on the right side of history. If you found value in this report and want to stay informed as this situation evolves, please take a moment to like this video and subscribe to the channel. Your support helps us spread this critical intelligence to others who need to hear it. Thank you.